Thank you, Lars. Thanks. When Lars asked me if I would come, right, I did have to hesitate for a moment. Do I want to jump on 20 hours of airplane time, 9 time zones, the jet lag? So I did have to consider it for a moment. But just a moment, because I realized that this was an opportunity for me to get smarter. Really, the only way that I would get smarter about InsurTech and the world would actually be being here. So thank you, Lars, for the opportunity. I sincerely appreciate it. I'll also say, I know all of you have your cell phones, and I welcome feedback. Now, there's 2 types of feedback you can give me. You can take your cell phone out, you can take a picture occasionally of a slide that's up on screen if it resonates with you. Terrific, I'm happy for that. Or you can be reading something on your email, right? And I'll take the feedback of that as well. I'll take the feedback of that as well, that I need to up my game a little bit on my presentation. So I like to start with a little context, then talk about where we are today in InsurTech, and then talk about where we're going, what the future holds. So to anchor the context, right, about 7 years ago, actually just as I was starting the InsurTech conference, I had a small condo not too far from the beach, and it caught on fire. It was pretty bad. You can see it here. Quite a bit of damage, lots of smoke, water, burning, and all that. But it was all right. It was okay. Right? I was fine. I had insurance. Before, not too good from the fire. After, it was lovely. Even got a couple upgrades. The condo building next door, where actually the fire started, was, as you can see here, a complete wipeout, right, down to the ground. But what's really bad is I was told that some of the residents there were not fully insured. Insurance matters. Insurance affects people. And we can think about the technology, the AI, all the great stuff happening, and our profit. But insurance, or lack thereof, affects people. I love getting to be part of the insurance world. I did a lot of banking and fintech. People never talk about, oh, I was up to my eyeballs in insurance. I was on an insurance treadmill I could never get off. Right? People in banking, people in lending, right? Sometimes there can be too much of a good thing. The problem with insurance is never that I have too much insurance. It's always that I have too little. So I love getting to be part of this industry. Now, also a bit of the context. This was a slide from the first InsurTech Connect about 7 years ago, 8 years ago. It was very clear in 2016 that something was happening in the industry. It was very clear that change was coming. Now, we didn't necessarily know what form it would take, like how it would evolve, the precise time frame. But we knew that it was ripe for change. And in many ways, that's because of the technology that had been developed, right? Not applied yet to insurance, but developed broadly. I like to think of insurance sometimes as the immovable object. Even the development of the web and the internet, which affected and changed so many industries, barely nudged how insurance was done. But so many additional technologies, the smartphone, advances in DNA, satellites, the cloud, AI, there was so much water behind the dam that not even the immovable object of the insurance industry could resist the irresistible force of all these baseline technologies being developed. And it really has been a technology-driven transformation underway. Now, what does a technology-driven transformation look like? What are the hallmarks? Technology takes friction out of the system. It makes it easier for transactions to happen. Technology increases transparency, both within an enterprise, so executives can actually see the movement of information, of data, of PDFs. But technology also increases transparency to the customer. Makes it a lot easier for a customer to comparison shop, for instance. When you take these two things combined, the reduction in friction and the increase in the transparency, it takes cost out of the system. it is, in a sense, deflationary. Now, that's good, right, for the system, right? It creates efficiency when you have technology being brought to bear. And we've seen over the years really two types of startups evolve to take this baseline technology out of the lab and into the market. Now, the one type, the ones that want to compete with the existing insurance companies, right, the lemonades of the world, the ones that are saying, okay, my job is to take all these baseline technologies and actually assemble my own technology stack so that I can offer insurance to the consumer, to the customer, and do so more efficiently than the incumbent. That's the job of one type of insurtech. The other type of insurtech, more of a B2B, is focused on saying, well, I'm not going to try to compete with the incumbents. My job is to take some technology, something baseline, and package it into a product that will be useful for the insurance companies. Both are legitimate approaches. We've seen both types emerge. In fact, over the last 7 years or so, this first wave of insurtech, we've seen what I would call a Cambrian explosion. Now, I'm a science geek. For those of you not familiar, right, about 500 million years ago in the fossil record, all these new life forms emerged. Many were dead ends, right? And we'll see some of the insurtech life forms might be dead ends. That remains to be seen. But there were also many new evolutions in what was possible in the life forms 500 million years ago. And I believe there are all these new evolutions of the different life forms that are emerging in insurance and insurtech. So that takes us to today. Where do we stand? What's been happening? Well, back in 2017, I tried to ask a few questions about how insurtech might actually evolve, where things might go. I feel pretty good about my track record, actually. I'm, as my wife will say, I'm definitely not always right, but sometimes I get it right. Probably my best call out was the API-ification of insurance. The notion of each piece, the building blocks and the technology stack would be available by API. Now, it's still very much a work in progress. I think that's a work in progress in this region, and it's a work in progress in every region. I can tell you that for sure. But it's also very much definitely happening. It's one of the best and easiest ways to actually create the efficiency coming out of technology. And I had the advantage, I worked in fintech for a decade. So I just looked at, well, what happened in fintech with APIs? Oh, there's this huge explosion of them. Of course, it's going to happen in insurtech. AI, right? The first use cases that were most interesting were not customer facing. They were use cases bring AI into the back office. Again, creating that efficiency, operational efficiency in particular. I think that's making progress. We'll talk more about that. Now, I've been a bit of a blockchain skeptic, not completely dismissive of it. And I think that in the long run, there will be a couple of interesting use cases. But, you know, certainly in 2017, it felt way early to be calling blockchain this panacea for how insurance could be done. And there's a saying, I don't know if it translates very well regionally, that the early bird gets the worm. Well, what people don't call out with that is that it's the early worm that got eaten. So sometimes it's okay to wait a little while. And then I also saw the trend that a lot of insurance companies wanted to increase their engagement with the customer. They wanted to be like a toothbrush, much like some of the banks have, where people would check their bank balance twice a day. As an insurance company, they were saying, I want my customer to be seeing the status of their insurance in the morning and then before they go to sleep at night. No, that's not what you want, right? What you want is a dentist visit, right? Twice a year, go for a checkup. If I got a cavity, get me in quick, you know, painless as possible. Thank you. So today, I think as we all know, from a venture perspective, from a startup perspective, it's tough out there. Right? This is a bit of an eye burner chart, sorry. But the key thing to take away is the volume of financing for insurtech globally is falling, right? Has fallen. Now, it hasn't fallen all the way down to the floor, right? It's more like 2019, 2020 levels. And really, I think that the issue, right, the root driver, and yes, there's macroeconomics all there, is scalability is not the same as sustainability. And I think a lot of both startups, entrepreneurs, and VCs kind of forgot that. And the importance of, whether you want to call it unit economics, combined ratio, or basic financial theory, the ability to scale is necessary for startups to succeed. But it is not sufficient. The sustainability of the business is equally important. And that is a lesson that is being learned, right? Painfully for some. So as we think about particularly the last 2 years, which has been this adjustment, and I won't go through every one of these, but 2 years ago, people were talking about capital as a weapon, right? And thankfully, we returned to some fundamentals. Capital is capital, and it's precious. You don't win by swamping the market with so much capital on your balance sheet. You win with sustainability of your business model. Right? Product COVID fit rather than product market fit. I believe that COVID unlocked many ideas, and it accelerated many use cases. At my VC fund, we've invested in a couple mental health startups. Right? And I think that was a long-term trend that was going to happen. COVID really accelerated the willingness of employers in particular to provide specialized mental health benefits for their employees. Great. That will continue. There's actually real product market fit there. But there were a lot of startups that got funded where they were seeing tremendous short-term growth because they had great product COVID fit. But thankfully, COVID has receded. Unthankfully for them, they've seen COVID receded and they only had product COVID fit, not product market fit. And then you're also seeing what I would call the tourist VCs. They are departing, and whether it's tourist as a function of geography or tourist as a function of sector, and they are, you're being left with just the sector or geographic expert VCs. I'm not going to suggest I'm an expert VC, but I made my first InsurTech investment in 2011 in a telematics company. I had my first InsurTech exit in that company in 2015. Right? I don't consider myself a tourist, at least, in this sector. So let's talk about the future. Where is this going? And I'd like to, sort of cite the Dunes trip that was organized on Friday. Really appreciated that, or Saturday. As I likewise, with a little bit of terror in my voice, asked, where are we going? Well, one aspect here, and this is actually in many ways a consequence of the APIification of InsurTech, is a shift. Now, the big red X over broker is an exaggeration, right? It has good effect, but forgive me. But with the APIification, it takes the friction out, and now other kinds of intermediaries, besides just brokers, are able to serve and distribute insurance products to the end customer, right? Businesses, banks, other types of Bs besides just the broker, and thus all the excitement and interest in embedding of insurance. Now, it's interesting, as the enthusiasm for embedding has risen, and as the proliferation of APIs have come out, there's actually emerged a new problem, right? A kind of many-to-many problem. Because now that there's so many insurance products available by API, and so many potential distribution channels who have an interest in distributing those, drawing the connections, having the developers build out the links between the many to the many has actually become inefficient. And I've started to see the emergence of gateway solutions, where it turns it into a many to one to many solution, creating more efficiency and scale. Sometimes I wonder, well, am I just seeing one instance of something and extrapolating too much? Very fascinated. A few months ago, I'd been involved with a company in the US building this kind of gateway. But then I saw a similar company in LATAM building for a similar solution, which tells me, okay, there's probably something here. It's not just a one-off. No code, right, I think, is gaining momentum. Now, I put my money where my mouth is. The VC firm I'm with, we invested in a no-code platform, CoverGo, which actually has a couple of clients in the MENA region, right, as well as a few other continents. I think that no code is not going to be all of how insurance gets done, but I don't think it'll be how none of insurance gets done. It can be an effective technology solution, especially now that the building blocks, the Lego blocks, right, are more available by API. One of the challenges, I think, one of the failures of sustainability is so many of the first wave of insurtechs tried to tackle an enormous market all at once. Right? So I mean, I'll pick on Lemonade just for a moment. Impressive company, impressive entrepreneurs. So I don't mean to overpick on them. But their manifest destiny, they basically said that they want to be in every line of insurance, every product category of insurance, and every geography. And look, if they get 0.2% market share, they win. Like, that's a big company with that scope. But it's very hard to be great at everything. You can be pretty good at everything, maybe. But to be great at everything, nearly impossible. Certainly, from the start. And I think that actually to win and to create sustainability, you need to be great at what you're doing. And the answer to that, and so I think a lot of InsurTech 2.0, the next wave, will be starting with a niche, starting with a narrow focus. Right? A couple examples of that I've run across. Jewelry insurance, right? Not the largest P&C category for sure, but in the US, there's maybe 2 or 3 specialists in it at most, and then it's a cross-sell for all the big homeowners insurance companies. Well, if it's a tiny little cross-sell for a big homeowners insurance company, they're not going to do it great. Right? And the couple other companies that have been doing it, they've been doing it for 40 years. They're not bringing technology to bear. Right? I really like this company starting with a niche, starting with a focus, so they can do it great. Their job is to get 12% market share doing great with sustainable economics. And then they earn the right to expand into adjacencies. Another example, a company I'm involved with, Kin, in the homeowners insurance space. Now, US homeowners insurance, big market, right? I would say, trying to do all of US homeowners insurance as a startup, right? Good luck even doing that good. It's really hard. Right? This company, Kin, focused on Florida. Florida is a crazy market. I won't go into all the reasons it's crazy, but there are many reasons it's crazy. They focus on it. They can do it great. They will be specialists at it. And then as they prove themselves to have really great unit economics in Florida, they can start to carefully expand. Well, let's go to Louisiana. Let's go to South Carolina. Let's think about how our ability to manage catastrophe issues can extend to wildfires as well. But they've got to be great at one little piece first, and then they can expand. So let's talk about artificial intelligence. Right? Now, look, I don't think that AI is at the point of Schwarzenegger and the Terminator yet. We're not there yet. We'll see. But it's really interesting to see what AI is amazing at, where AI can be better than humans. There's a contest last decade, every year, where a whole database of images were getting classified. And they benchmarked against how humans could actually classify. Is that a cat? Is it a chair? What have you? And you can see here, the beginning of last decade, the computers were lousy, much worse. But by the late to middle end of the decade, the computers were better than humans at image classification. That's really interesting. That's baseline technology. Right? Then again, the job of InsurTech is to convert baseline technology into something useful for the insurance industry, like how to process satellite data of rooftops, right, for underwriting or claims, like extracting data out of PDFs, right? Very mundane, right, but very useful. Now, of course, we're at the point of GPT. And some people will talk about GPT as having its iPhone moment. Right? I actually think that it sits somewhere between the iPhone and the invention of fire in its importance. I'm not sure where, but yeah, it's actually more important. Now, I also desperately hope that whatever it said about me is not too insulting. So, because my Arabic is pretty rusty. I apologize. But it really is quite striking what it is capable of. And it's just the beginning. But still, I think for the near to medium term, it's about the back office, not customer facing. Right? And I did a little experiment to try to pressure test this. I took my father's homeowner's insurance policy, all 18 pages of it, right, in a PDF, and uploaded it to a basic GPT, not the very latest from OpenAI, but a recent one. And then started, and not trained specifically by any means on insurance use cases, and started asking it a few questions. And the answers were okay, helped guide me a little bit where in the document to look for specific answers. But it wasn't great, right? A human agent would have been better to answer these questions. But I think a human agent equipped with the GPT capability, looking at the policy, would have been better still. And of course, as the technology evolves, as you get verticalized use cases built on insurance, trained on insurance, it will be better. But I think that the key is in the near term, it's about pressure testing and learning how to use it first with in the back office, so that the human, the broker, the agent, whoever, can help navigate on behalf of the insured. So I'll start to wrap up here. I know that'll make Lars happy with the clock. I often am asked, what makes a company an insurtech? My answer is, at a certain level, at a deep level, it's not about how long the company has existed. It's not about the size of the company. It is really about the culture. It's about how the company solves problems. And there are two ways that a company can try to solve problems. Say an insurance company has a marketing problem. Well, a traditional approach, let me go hire a marketing expert, right, and see if they can solve this marketing problem. A technology company will start by saying, oh, I've got a marketing problem, great. Let me go hire an engineer and see if they can write the software to solve that marketing problem. Oh, you've got a finance question? Well, do I go hire a head of finance, or do I go hire an engineer and try to solve the problem through software? And by the way, sometimes the engineer and the software, it doesn't work, right? It's the wrong answer. But you can always, after giving the engineer a chance, you can always fall back to hiring the functional expert. But when it does work, when you do succeed at solving a problem through the engineer and the software, it is much more scalable, at higher margin, more repeatable. And that's why tech companies, Google is a tech company, right? They just make their money from advertising. It's a publisher. But it's a tech company because of how they solve their problems. The competition between the incumbents and the startups. This is a fun one, right? People are always asking about this, wondering, well, there's a very good investor, Alex, who described the battle as one about whether the startups can figure out distribution before the incumbents can solve for innovation. I think that is right, but it's only partly right. It's an incomplete answer, because I think it looks at things from a marketing lens. And so I would offer another answer, which I think is also just partly right, looking at things through the cost lens. Right? And it's really a question of whether the startups can get the efficiencies of scale, because scale does matter to those unit economics, before the incumbents get the efficiencies of software, because software is also a way to improve your cost structure. And so I think there's competition, there's a race going on there. And in fact, it's also very important. This actually, I added this slide in yesterday based on a conversation I had at the conference on Saturday, where someone was talking about the sort of different, how to partner, and how the insurance companies and the startups are trying to figure out how to partner with each other. And I think it actually starts, most of all, with understanding what the other type of company brings to the table and how it is complementary to what you bring. So if you are a startup, you are bringing speed and ability to focus on just a very narrow agenda, and hopefully having the right culture of risk-taking. If you are an incumbent, particularly in insurance, your strengths are around the sort of resilience through business cycles, the financial strength, the balance sheet, the experience you have, the data sets that you have, and a culture, I hope, of risk management. And so when you are looking to partner with the other type, recognize what you bring to the table, recognize that what you are seeking in the counterparty. And it shouldn't be more of what I'm about. It should be more of what they can bring that's complementary to what I have. So finally, on the same notion of startups and incumbents, sometimes I hear the incumbents talk about, oh, the startups are doomed. They don't really understand insurance. They have lousy unit economics. They don't, what's a combined ratio for them? The regulators are going to shut them down. The startups are doomed. That's one view, a bit of an extreme view. Sometimes also hear from the startups, oh, in the long run, the insurers are doomed. They don't understand innovation. They don't get software. We're going to eat their lunch, right? Squawk, 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 squawk. In the end, the winners are going to be those organizations, whether they start as an incumbent today or start as a tech startup today, doesn't matter. The winners in the long run will be those who bring the best of both into one organization. So that's InsurTech in the future. Thank you.